Hello everyone and welcome to At Barrons. I'm Andy Serwer and welcome to our guest, Mark Lashier, CEO of Phillips 66. Mark, great to see you. Thanks for joining us.
Thanks for having me, Andy. I appreciate it.
So you all are in downstream operations at this point, which is retail assets, chemicals, refining. Phillips out of Bartlesville, Oklahoma originally, but you're in Houston.
Yes,
These days.
I actually started my career in Bartlesville,
Is that
Oklahoma.
right? All right.
Yeah.
So tell us about the downstream and why that's a good business to be in.
Sure, the downstream's a great business. We spun out of ConocoPhillips in 2012, a big integrated major. And downstream means everything next step down away from exploration and production of crude oil. So we've got systems that gather natural gas liquids, gas, crude oil, and process it and turn it into things that you need to use every day. So we've got gas processing facilities, we've got pipelines that bring crude oil to our refineries, bring natural gas liquids to our fractionators, and then we have refining operations, midstream operations, as well as commercial operations to get the materials out in the marketplace and capture the most value for our business that we can. And we do have retail presence. We've got several brands. Out in the West Coast, we've got the 76 brands. So if you watch the World Series, unfortunately the Dodgers, we like the Dodgers, right, particularly during the World Series because our logo's up there. Every time you see Shohei Ohtani hit a home run, you see our logo. Mm-hmm. In the Midwest, we've got the Phillips 66 shield, Conoco, hottest brand going. And so we've got a great marketing presence across the continental United States. And we've got commercial people that are out there every day hustling to make sure that our products find the best markets. And we've got a global footprint too. Right. We've got refineries in the UK and in addition to our refineries here in the continental United States.
Now the business has been running pretty well recently. I mean, the overall oil and gas business, a lot of people watching Landman, see a lot of excitement there. How would you characterize the overall sector at this point, stepping back a little bit?
Well, I think it's healthy. I think crude oil prices are off a bit because of various geopolitical events and the crude that's being produced. Refining is in a really good spot. Refining capacity is fairly tight globally. There's been a number of assets rationalized over the last several years, including one of ours in California. And demand just keeps ticking up on a global basis. We're seeing 1 or 2% demand growth for refined products across the globe. And so that's constructive for our refining business.
Yeah, why are you closing that refinery in California?
Great question. California, we've been operating in California in various forms for more than about 130 years. We converted a refinery in San Francisco to process renewable feedstocks to make renewable diesel and sustainable aviation fuel. We have another refinery in LA. That was actually the combination of two very old refineries, so it was inefficient in its operation, very high cost, and we came to the conclusion that the 650 acres that these assets occupied right on the port of LA is likely worth far more than any refining operation, and it was going to take hundreds of millions of dollars to continue to upgrade these facilities and keep them in safe, reliable operation. And so we had to make the tough decision to cease operations and go through the process to redevelop the property. And it's been really warmly received by the folks in LA as well as the administration in California.
Yeah, there's a lot of deal making always in the oil patch, and you talked about the Conoco deal. Conoco, Phillips merged in 2002, and then you mentioned spun in a decade later, 2012. What's going on? What's the state of play right now in terms of consolidation and M&A?
Well, I think as far as refining business, you do see the larger refineries in North America are more independent refiners. We're a bit unique because we have a strong refining presence, but we also have that midstream presence that many of our competitors don't have, and we own half of one of the world's best petrochemical companies, Chevron Phillips Chemicals. Chevron owns the other half of it, and we've been cooperating with them for 25 years now, making Chevron Phillips a great company.
Yeah, you had this activist shareholder, Elliott's been kind of on your case, I guess, for a while, and now you kind of had a period where they're on the board, kind of maybe made peace, or you're working with them, I guess you'd say. They're an investor. They've criticized your integrated approach. So why, as being an integrated company, makes sense, and how does that work?
As I said, we're a unique company, and over the years, the reason integration makes sense for us is we've been building out competitive advantages based on integration. We didn't just have these assets appear overnight and then push them together artificially. They've grown organically around primarily our Sweeney complex in South Texas. So we've been able to maximize the utility of that refinery by having petrochemical facilities. CP Chem has 3 ethylene facilities there, and they have polyethylene facilities, and they have other petrochemical facilities that use feedstocks going back and forth. They share resources. It's very synergistic. Likewise, our NGL midstream operation has fractionation facilities, big distillation columns that take these raw NGLs out of the West Texas oil fields and converts them into materials that primarily are used as feedstocks for petrochemicals. And so when you think about these things being co-located and molecules moving back and forth and all of the synergies that we can create through that, that creates a competitive advantage for us, and we lean into that very hard. Our latest integration opportunity was the Western Gateway pipeline that we announced. It will take mid-continent refined products like jet fuel and gasoline and diesel. We'll be able to move those materials all the way from St. Louis to Santa Monica when this project goes forward. So we can take lower cost refined products and move them and compete in California and fill the vacuum that's being created by the shutdown of facilities in California as they go forward.
Now, are you partnering with Kinder Morgan on that?
We are.
And is that, how are you able to move forward on that? I mean, is the environment at this point better with pipelines? Because pipelines can be problematic.
Mm-hmm. I think we'll be in a part of the world where pipelines are less problematic. Much of this project will involve existing assets. We're going to reverse flow on some pipelines from our Wood River refinery that's just across the Mississippi River from St. Louis, and we'll be able to move those products to Ponca City, another refinery we own, onto our Borger, Texas refinery, and then we're going to build a new piece of pipe down to El Paso, and then the stretch that goes across into Phoenix will involve existing rights of way that Kinder Morgan has. And so a lot of it is already pre-baked, built, and in the ground, but we're working through that segment from Borger to El Paso as we speak, getting all the rights of way sorted out, and we don't see any major issues at this point in time.
But you got to love those existing right-of-ways.
Yes.
Those things make life a lot easier. Going back to governance a little bit, Mark, I understand you added a couple new directors, maybe as part of this situation with Elliott, and I'm wondering how that's working out for you.
Right. We elected four directors last May during our annual meeting. One was an existing director who actually we added in cooperation with Elliott a year earlier. And then we added 2 members that were nominated by Elliott and were successful in the election. And then we added a third director that was external. He's new to the board, but he was not nominated by Elliott. He was nominated by Phillips 66. They've all joined the board. We have a very rigorous onboarding process. We'll bring them in for several days. They have free access to all the information they need, all the people that they want to talk to understand how the business is operated, to see the quality of people we have, the quality of leaders we have. And I step aside and let them have free reign, free access to anybody they want to talk to make sure they're grounded in the fundamentals of our business so they can be great board members. And it's always successful. And we've had several board meetings with these new members. We've had deep dives on our strategy, and every one of them is fully aligned with our path forward. Every board member we have represents the shareholders. And every board member we have asks us challenging questions, tough questions. They bring their own expertise to the table. In fact, if you look across the board, right now we have 14 board members, and all of them were very purposefully selected for the background they bring to the table, the expertise they have, to make sure that we don't want a bunch of people that just think the same way about everything. We want problem solvers. We want experienced executives that understand what makes companies great, what the risks are out there, how to bring talent along, and how to drive the strategy forward to maximize the value we can create for our shareholders over the long term. And the entire board is aligned and moving forward. The new members have been incredibly constructive, and they're right in line with the rest of the board members.
You've been CEO since, July 2022?
That's correct.
And the stock had underperformed a little bit since then, but has now subsequently caught up with just the S&P 500 as a benchmark, for instance. So what are you doing, Mark, to make sure you continue to drive that outperformance versus, say, the overall market and obviously your peers as well?
Yeah, we've committed to our shareholders to ensure that our refining business is world-class. That means that we have safe, reliable operations that are improving each and every day. We've taken more than $1 a barrel out of our cost structure in our refining business, which is dramatic. That's billions of dollars overall. We've also undertaken efforts to enhance our ability to capture more margin in those businesses. We've invested in a number of low capital, high return projects that have allowed us to make more jet fuel, allowed us to be more flexible in the crudes that we process, that have allowed us to make higher octane gasolines, things like that, that have just, we can identify projects. We've got bright young engineers out there harvesting opportunities every day, and it's really changed the whole mindset of our refining organization around how we operate, how we challenge the status quo, use new technologies from AI to you name it to get the most out of the assets that we have. We don't need a lot more refining capacity. What we need is better capacity. We need to get the most out of the assets that we have, and that's what we've committed to our shareholders. And then if you look at our midstream business, there's growth opportunities in our midstream business, so we do need to be very disciplined but grow the volumes and the returns that we can generate out of the midstream business. So we've been selling non-core assets. We've sold $5 billion worth of non-core assets in the last few years, and we've redeployed that capital, either returning it to shareholders or investing in even higher value opportunities that cost much less than they would otherwise.
End of the day, though, Mark, it's a commodity business to a degree. I mean, it's the basis of it, and so I'm wondering how you look to address that sort of volatility that comes with that business.
We focus on the things that we can control every day. We can control costs, so we drive our costs down to a responsible level. We don't want to put our assets at risk, so we want safe, reliable operations, but low-cost operations, leveraging everything we can to bring our products to the marketplace, and then focus on how can we maximize the margin of every barrel of oil that we process or every barrel of natural gas liquids that we process. So we've got to always keep cost in mind, but always keep value in mind as well. So the dollars that we can generate per barrel that we process of everything, that's the function that we try to maximize.
Let me ask you about demand for your end products, for fuel in particular, for instance, and how do you see that playing out next year and the years beyond that, and what factors are going to be influencing that?
Well, there's two different dimensions to that question. There's North America demand. We see North America demand plateauing, but we see global demand for refined products continuing to tick up by 1-2% a year. And refining capacity is being rationalized globally, not just in the U.S., but elsewhere. And new builds aren't keeping up with the rationalization. So we continue to see a little more tightness every year in refining. And so that's constructive for our business. So demand's increasing, supply is stagnant to shrinking, and so we're supplying the world based on very world-class assets, advantaged natural gas pricing, advantaged crude access in North America, and that lets us play anywhere in the globe where we can find the most value for our products.
You hear a lot about regulation, deregulation, things need to be deregulated, they were too regulated. What's your take on what that situation is right now?
What we've been advocating for and Congress is trying to address as we speak is some more consistent regulation on new infrastructure, pipelines that cross state lines, that we can't afford to invest in things that have these perpetual challenges in courts, that once we get a permit and that we've done everything right, we can still be taken to court and sued. And so what Congress is trying to do is to put a firm foundation that allows this infrastructure that we so need to keep access to clean, affordable energy in place. And it's not just for pipelines, it's also for electrical grids that we're going to need. As the AI boom goes forward, we're going to need more and more power. So we have to have the ability to get projects approved efficiently and that approval is sustained.
And so how do you see the situation in the United States with the resources we have versus resources in other countries, let's say like in particular Venezuela, Saudi Arabia? How important is it to develop those resources and be able to bring them into the U.S. market, or can we go it alone with, say, the Permian and the other places we have here?
I think it's very important for for the economics of the U.S. and even national security, that we have a wide variety of crudes that we can access. So we should be able to ensure that we can access the optimum crudes for our system, the optimum crudes for our economy. But we've built into our facilities and continue to invest in opportunities to be flexible on which crudes we can operate. For instance, we have assets that were designed to process heavy crudes from Venezuela. Canada produces heavy crudes, so those assets can use those crudes quite well. But we're investing in some flexibility so we can consume also without penalty the lighter, sweeter crudes that are being produced in the Permian Basin. So we want to flex and be able to process whatever crude in that moment in time makes the most sense.
Right. And then how does that inform you as to, say, the outlook for the business over the next 5 to 10 years? And you've got the heavy hand of politics sometimes coming into play, sometimes not. I don't know which you prefer. I guess it depends what sort of politics you're talking about.
Well, first and foremost, we have to focus, as I said earlier, on the things that we can control. So safe, reliable operation, maximizing the productivity of our facilities, producing the highest value products we can produce. But then we also have to engage in the political process. We've got great teams on the ground in D.C. or in California that can help craft and create the policies that we need to really have a robust energy system in North America. We've got politicians that are working in earnest to do the right things, but sometimes they don't understand the unintended consequences of the decisions they're making. And so we spend a lot of time talking to politicians and talking to their staff members about what their policies will do to our industry, and we have great conversations both with the federal government and in local governments, state governments, California, Texas, New Mexico, every place that we do business. We want to make sure that we get the information in the hands of the policymakers so they can make better decisions that promote access to clean, affordable energy.
Let me ask you a little bit about you, Mark. I know you're a Cyclone, right?
Yeah,
Iowa State.
Cyclones.
Right,
yeah.
yeah. So where did you grow up? You went to school there. Talk to us a little bit about that.
I grew up in a little town in the southwest corner of the state of Iowa. My hometown has about 600 people in it. And I went off to Iowa State.
You must have been most likely to succeed in your high school class, I bet, or something like that.
You'll have to ask my classmates that. But no, it was a great place to grow up. Had a great, come from a big family. Farragut, Iowa.
Farragut, okay.
Named after Admiral Farragut from the Civil War.
Mm-hmm.
And great family, went to Iowa State. I had absolutely no idea what I was going to do. Fortunately, I went to a great school. I got to explore different opportunities, and I discovered chemical engineering. Liked it so much that I ended up getting a PhD in chemical engineering. And when I was looking for a job back in 1988, 89, I discovered Phillips Petroleum Company. They had a great research and development organization. They were generating patents like crazy around petrochemicals, around refining. They have a lot of technologies that every refinery on the planet uses today. And same thing in petrochemicals. They invented some of the materials that we all use every day. And so it was a great place to start my career. I then had opportunities to go out and work in facilities and then move into business development opportunities. So it just, a great company just kept giving me great opportunities to grow and develop.
And I understand you have the technical skills, but where did you learn the management skills to lead a company, become a CEO?
Yeah, that's a great question. I would say as I moved into commercial operations, I had responsibility for more people. I had responsibilities for the profit and loss of businesses, so I got a keen understanding of that. I worked in business development. I got international exposure. I was helping develop projects in the Middle East, projects in China in the late 90s, and that went well enough that I ended up being asked to move to Singapore to manage all the Phillips Petroleum interests in Asia. And shortly after I made that move, Chevron Phillips Chemicals was formed. And so then I had the task of combining all the Chevron petrochemical assets with all the Phillips 66, or all the Phillips Petroleum assets in Asia. And while we were still operating large joint ventures in Asia, I had to manage those assets as well. And to be halfway around the world from the mothership, having to manage a lot of things by influence, having to manage a lot of government relations in different cultures, I think that was the best growth opportunity I had, the best preparation I had to be CEO. And then eventually I became the CEO of Chevron Phillips Chemical Company. And I remember the day I was essentially, I didn't know it at the time, but I was essentially being interviewed by the lead director of Phillips 66 to be part of my predecessor's succession plan. And he asked me to talk him through how I managed the competing interests of Chevron and Phillips 66 as the CEO of Chevron Phillips Chemical Company. And it is complex. You're trying to sell ideas in two very different organizations to keep these two large organizations aligned. And I really think that's what convinced him that I might have what it takes to compete for that job.
Right. My understanding, by the way, that the 66 on Phillips 66 comes from the number of the formula used, from the miles per hour the car was driven, and it's near Route 66, kind of all three of those things?
You've done your homework,
Absolutely.
absolutely.
Yeah, it's like kind of, that's where it's kind of a trifecta of meanings for the 66,
Way
correct?
back in the day, 66 was high octane. Now high octane is 96, but 66 octane gasoline, they were driving 66 miles an hour on Route 66. And that's
got to be that.
Yeah.
All right, final question. I mentioned it earlier, Landman. We're sitting here in New York. That's what most people think about the Texas oil business right now. Okay, so do you watch Landman, number one? Do you like it, number two? And is it realistic at all in any way, Mark?
I watch Landman. I enjoy watching Landman. It's a little hyped up, particularly from a safety perspective. The industry is much safer than what's portrayed there.
Tommy Norris not doing a good job on those rigs.
But I will tell you that Billy Bob Thornton has given some great speeches about the energy industry and how important it is. I tell my kids, you see that speech Billy Bob gave? I've given that same speech about a dozen times without the F-bombs, but it's the same idea that hydrocarbons are very important to the global economy. The whole system is built around that, and you can't just throw that all away and hope that something else can take its place. We've got to be very deliberate as we evolve the energy system to lower carbon, and we're doing that every day. But hydrocarbons are very important. They can be made cleaner and they can be made better each and every day, and that's what we're committed to do.
See, I've seen some of that serious message in that show, so
yeah.
I got it. Mark Lashier, CEO of Phillips 66, thank you so much for joining us.
Thanks, Andy.
This is at Barron's. I'm Andy Serwer. We'll catch you next time.